Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one idea at a time. I'm your host, AlgoBot, and in today's session we're exploring an original approach called Symbolic Entropy Regime Trend. This expert advisor borrows an idea from information theory. It treats the market as a source that emits one symbol every bar, then measures how orderly or how random that stream of symbols has become. By the end of this video, you'll understand how it reads market order, how it detects direction, and how it manages every trade from entry to exit. Let's dive in. So what exactly does this expert advisor do? At its heart, Symbolic Entropy Regime Trend is a trend in regime strategy. Rather than relying on classic tools like moving averages or a stochastic oscillator, it builds its own custom measurement directly from raw price. Every completed bar, the strategy calculates the logarithmic return, which is simply the change from one close to the next, and then divides that return by the recent volatility. This self-scaling step means the same logic adapts whether the market is calm or busy. Each of those scaled returns is then labeled with one of four symbols, based on whether the move was strongly up, mildly down, or strongly down. Over a rolling window of 40 bars, the strategy counts how often each symbol appears and computes the entropy of that distribution. Low entropy means the moves cluster into just a few buckets, which describes an ordered, one-sided market. High entropy means the symbols are spread evenly, which describes a disordered, effectively random market. The strategy converts this into a single order value between 0 and 1. There's a second ingredient, drift. Drift is the average of the scaled returns, and it tells the strategy which way the market is leaning. Order on its own is direction blind, so drift supplies the sense of up or down. This EA can be applied to many symbols and timeframes in MetaTrader 5, from major currency pairs to metals and indices, though as always you should study it on your own instrument and timeframe first. It's designed for traders who are curious about regime-based, systematic thinking rather than discretionary chart reading. Remember, this is an educational walkthrough, not a recommendation and not a promise of any outcome. Trading carries real risk, and losses are a normal part of the process. Let's walk through the exact logic step by step. On every new bar, the strategy works only with completed price data, never the still-forming candle, so its calculations stay stable. First, it needs enough history, at least 40 bars for the return window, plus a few more for the 14-period ATR. If there isn't enough data, it simply waits. Once it has history, it computes the log returns across the window, measures their standard deviation as the volatility, and divides each return by that volatility to get scaled returns. It averages those scaled returns to get the drift. Then it symbolizes each return into one of the four buckets, using the strong move threshold, set to 1 by default, to separate strong moves from mild ones. From the counts of each symbol, it calculates entropy, and from entropy, it derives the order value between 0 and 1. Now the decision. To open a new position, two conditions must both be satisfied. The order value must sit at or above the order threshold, which defaults to 0.20, confirming the market is in an ordered regime. And the drift must be clearly positive or clearly negative, beyond the drift minimum of 0.05. If order is high and drift is positive, the strategy signals a long entry. If order is high and drift is negative, it signals a short entry. If the market is disordered or the drift is too flat, it simply stands aside. This is the strategy rejecting choppy, alternating markets that look busy but go nowhere. When a long entry is signaled, the EA places a buy at the ask price. It sets a stop loss below the entry at 2 times the ATR and a take profit above the entry at 3 times the ATR. A short entry mirrors this, a sell at the bid, with the stop loss above and the take profit below, using the same multiples. Because the take profit is 3 ATR and the stop is 2 ATR, each trade is structured with a reward to risk of roughly 1.5 to 1. Finally, position management. The strategy never stacks trades. While one position is open, it won't add another. Each trade can close in one of two ways. Either price reaches the ATR stop or the ATR take profit, or the ordered regime dissolves. If the order value collapses below the exit order threshold of 0.10, The strategy reads that as the structure breaking down, and it closes the position early rather than waiting. That regime dissolution exit is what makes this approach adaptive. Let's look at the actual MetaQuotes language code that runs inside the expert advisor. At the top are the input parameters you can adjust in the strategy tester. Windows sets the 40-bar analysis window. Strong move threshold is the tau value that separates strong moves from mild ones. Order threshold and DriftMin are the two gates an entry must pass, while exit order threshold defines when an ordered regime is considered dissolved. ATR period, stop ATR multiple, and TP ATR multiple control the stop and take profit distances, and lot sets a fixed trade size. Below the inputs is the entry section. The first line says that if the order value is below the order threshold, the function simply returns and does nothing. No ordered regime means no trade. If that check passes, the strategy looks at drift. When drift is greater than the drift minimum, the buy block runs. It reads the ask price, sets the stop loss at the entry minus stop multiple times ATR, sets the take profit at the entry plus take profit multiple times ATR, and calls trade.buy with the fixed lot size. The sell block is the mirror image in the else if branch. When drift is less than the negative drift minimum, the strategy reads the bid price, places the stop loss above the entry and the take profit below it, and calls trade.sell. Notice that both sides share the same order and ATR logic. Only the direction of the drift and the sign of the stop and take profit change. It's clean, symmetric, and easy to audit. Now let's bring it all together on a chart. Below the candles you can see the strategy's own indicator, the regime order value, plotted between 0 and 1. The green dashed line marks the entry threshold at 0.20, and the red dashed line marks the exit threshold at 0.10. Watch how the two panels work together as price unfolds. At the far left, the market is drifting lower in a choppy, hesitant way. Notice the order value down here. It's low, sitting below and around the entry line. The symbol stream is mixed, entropy is high, and the strategy reads this as a disordered market. So it does nothing. This is the discipline built into the approach. When the source looks random, it simply stands aside. Around the fourth candle, things change. Price puts in a low and begins to climb, and each new bar closes higher than the last. As those upward moves cluster into the same symbol buckets, entropy falls and the order value rises, pushing up through the 0.20 entry line. At the same time, the average of the scaled returns, the drift, has turned clearly positive. Both conditions are now satisfied. Order is above threshold and drift is up. The strategy signals along, and you can see the buy entry marker appear. The stop loss is placed below, at 2 times the ATR, and the take profit sits above, at 3 times the ATR. From there, the uptrend does exactly what the strategy hoped for. The 5th, 6th, and 7th candles push steadily higher. The order value stays elevated inside the ordered zone, and the drift remains positive. Price runs up into the take profit level above the entry, and the long position closes for a gain in this illustration. Notice we never spoke a specific price, because the chart has no price axis. We're simply watching structure, a fresh low, an ordered climb, and the take profit marker above the buy. Then the character of the market shifts. Around the 8th candle, the advance stalls and reverses. Look at the order value. It dips back down, dropping below the entry line toward the exit threshold. This is the turn. The symbol stream has become mixed again as up moves and down moves compete. Entropy rises, and the regime briefly dissolves. The strategy holds no position and waits. By the 9th candle, a new order emerges, but this time to the downside. Price is making lower closes, the down symbols begin to cluster, the order value climbs back above the 0.20 entry line, and the drift is now clearly negative. Order is high and drift is down, so the strategy signals a short. The sell entry marker appears, with the stop loss placed above at 2 times the ATR and the take profit below at 3 times the ATR. The final candles follow through. The 10th and 11th bars close lower, the ordered down regime holds, and price slides into the take profit below the entry, closing the short in this example. Across both trades, the pattern is identical. Wait for an ordered regime, read the drift for direction, enter with the drift, and exit either at the ATR levels or when the order value collapses back below the exit line. That reward to risk of roughly 1.5 to 1, combined with the stand-aside discipline during disordered phases, is the whole idea in action. Of course, not every setup resolves this cleanly. This is a simplified illustration, and real markets produce losing trades too. And that brings us to the end of our look at Symbolic Entropy Regime Trend. Today we unpacked how the strategy turns each bar into a symbol, measures whether the market is ordered or disordered, uses drift to choose a direction, and manages every trade with ATR-based stops, ATR-based take profits, and a regime dissolution exit. We also read through the core MetaQuotes code and walked a long and a short example across the chart. Remember, everything here is educational information only. It is not financial advice, not a recommendation, and not a promise of any particular result. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.